It's about that time of day again. My name is Joseph. It's Monday evening, May 23rd. Welcome back to your nightly newsletter. We're covering crude, S&P, gold, euro, and DAX tonight. Crude is bullish ahead of tomorrow's inventory report, but we're trading right at the high of a spiking channel. So we're waiting for rotation back to the low for the most reliable buying opportunities tomorrow. The S&P is bullish, but trading inside a range is telling us to focus on failures below that range low, and we're watching that battle zone for key levels of support tomorrow. Gold is bearish, but trading at the low of a channel tells us to wait for rotation back to the high and look for selling opportunities back down to the low tomorrow. Euro's bearish, but trading at the low of a wide bear channel, telling us to use the midline as resistance and look for selling opportunities up at resistance levels overhead tomorrow. DAX is bullish, but trading in the middle of the range tells us to look for buying opportunities at support levels near the lows with a target going back up to retest the high. But I have another great newsletter in store for you guys and gals tonight. Plenty of reliable trading opportunities setting up for Wednesday's session. We get some big charts to look at. We get some big news tomorrow on the schedule. And of course, before I jump into these charts and put the plan together for tomorrow, please don't forget the only place to watch the full length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link, come join me here on the blog at Sideways Markets and watch the full length version with all 5 markets and all the analysis. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social, lower left-hand corner, many different ways to follow me on social media, whether it be StockTwits, Facebook, Twitter, LinkedIn. Follow me on many social media channels, lower left-hand corner. I'm always posting important charts and updates throughout the day there. Don't forget, speaking of charts, you can download all the charts from tonight's video by following that link below the video tonight on the blog. Grab those charts and have them ready on your computer for tomorrow. Don't forget to grab your free pass, upper right-hand corner. Grab that free pass. If you're not an advanced member here at School of Trade, you're going to learn more with me in 90 minutes on that free pass. Grab that free pass in the upper right-hand corner. And please don't forget, if you're brand new here to SOT, get a great frequently asked questions page, and I'm always here to help you guys out 24/7, 365, right, to answer all your questions. Hit me up on the live support tool on the right-hand side of the website. Boy, oh boy, it's been a great 4th week of the month of May. Had another great day today in our trade room. You guys are doing well out there. Tomorrow's Wednesday the 24th coming up tomorrow. Of course, whenever we talk about a Wednesday, we always start thinking about inventories here tomorrow. The big headline news for tomorrow will be the inventory report for all you crude traders out there. Don't forget the S&P also moves well around the inventory report as well. So please don't forget, my cutoff on Wednesdays is 10:15, right? 10:15, that's 15 minutes before the news comes out on Wednesday morning. News comes out on crude oil at 10:30. Cutoff is at 10:15. Then I'll give it at least 5 minutes after the news comes out tomorrow morning so we can put the plan back together and trade accordingly. So most important thing for all the crude traders tomorrow's inventory day today. Tomorrow's inventory day. So of course, with that said, we do want to make sure to trade around that news. Be careful trading too late in the morning. Again, 10:15 is my cutoff. And then wait for the market, wait for the dust to settle, right? And then we'll put a plan back together with all of our clients in the trade room tomorrow morning after the news comes out at 10:30. Outside of that inventory report tomorrow, we have some news, right, from the Bank of Canada. And of course, we have the existing home sales at 10 a.m. as well. That will definitely be a big headlining news number tomorrow morning at 10 a.m. And of course, we have the FOMC meeting minutes at 2 p.m. Eastern time. Those will always be, right, an important market moving event if you plan on trading markets like the S&P in tomorrow afternoon session. So most important thing for tomorrow, if you're trading crude, is the inventory report at 10:30. Get to it before the news comes out and then let the dust settle and trade afterwards. I also want to remind you too, I'm going to post tonight for the inventory announcement tomorrow. I'm going to post the inventory levels below this video tonight. I'll talk about that in a little bit more detail as we go forward with tonight's video. And again, tomorrow afternoon at 2 p.m. Eastern time, if you trade in the afternoon session, right, keep an eye out for the FOMC meeting minutes at 2 p.m. Eastern time. Let's get moving. Busy evening here for us tonight. Got a lot of stuff to cover here this evening and a great session setting up for tomorrow. I do appreciate you guys waiting around for me here tonight. I do realize I'm a little bit late here getting the video out. Let's jump in crude, S&P, gold, euro, and FDAX. Crude is bullish and trading at the high of a spiking channel, which tells us to look for buying opportunities near the low of the channel around the battle zone with a target going back up to retest the high. Now remember, tomorrow is inventory day, so the plan is to find those trades before 10:15 a.m. and then sit on hands until the dust settles after the news comes out, and then we can put the plan together from there. Now, one of the things I want to point out here on this chart tonight is that I do have the inventory levels for tomorrow's session. These would be good until the end of the day tomorrow. You can either write those levels down or you can download them right below the video tonight. If you're on the blog here at sidewaysmarkets.com, again, if you're on the YouTube channel, there's a link in the description of that YouTube video. Follow that link and come join me on the blog at Sideways Markets. And right below the video tonight where it says click here to read more, follow that link and that will give you all those information. You can copy those numbers off the blog post. So make sure you scroll down on the blog, right where it says click here to download or click here to read more, right? Follow that link and that will give you a chance to just copy and paste those levels. But again, those are our levels we're watching for tomorrow. Those will act as short-term support and resistance for tomorrow. So grab those levels, get them on your chart, avoid trading directly into them. I always look to avoid trading directly into them because they will create short-term support and resistance. After we address that, this is a spike in channel. And of course, the goal of a spike in channel is to buy low, buy the low of a spike in channel, buy the battle zone below the low of a spike in channel, and as you can see right now, we're trading up around the highs. The objective right now, the goal for tomorrow is to get this price down in those lows and look to be a buyer down in those lows, right? Again, get it down around the low of that channel, right? And then look for that move going back up to retest the high. A nice objective you're waiting for us tomorrow is definitely going to be that measured move. Obviously, again, we got news tomorrow morning at 10:30 a.m. So, right, we'll do our best to get those trades early in the session, right, before we sit on hands after 10:15 and wait for the news to come out. So, as we pull back here right now, looking for failures, right, looking for failures, seller failures. We're looking for that two-legged pullback. Two-legged pullbacks oftentimes incorporate a trend line, and of course, right, we may see it dip a little bit further back, right? We may see the bears take short-term control and then give it back to the bulls, right? We may see the bears take short-term control and then later on give it back to those bulls, right, later on in the session tomorrow. So we'll wait and see how that goes, right? It may just kind of may pull back sharply here and then give us a shot here to buy off a failure. It may also rotate lower, turn bearish, and then turn bullish, right, for that move going back up to retest the high. The bottom line is we want to buy the low of that channel, so stay patient. Look for areas of support down inside this battle zone and look for buying opportunities there. How does this market turn bearish tomorrow? On strength. Strong move down, hold a pullback to the moving average, and then all of a sudden this becomes a bear market hunting for a retest of that low down around the 50-57. So bull spike in channel, again ahead of tomorrow's inventory report. Look for buying opportunities at the low of that channel using failures, using two-legged pullbacks. Watch the battle zone as key areas of support as well. And again, if you want to be a seller on this, you're perfectly welcome to be a seller. I just have to wait for the market to turn bearish first. If it goes higher here without us, don't forget that measured move is acting as resistance. There's a reason why I have this as the no trade zone. If it does go higher here before pulling back for us, just make sure you wait patiently here for some traps. Look for traps, and again, just keep trying to buy low. If we do see the price jump up without pulling back, right, the bulls obviously have control of the market. I just don't want to buy high, so wait for those two-legged pullbacks, wait for those traps, wait for those seller failures below the moving average. Just don't be buying the high, right? So again, pull back, right, buy low. If it doesn't go low and goes high, right, then you want to look for those traps. Then you want to look for those two-legged pullbacks, right, to allow you to buy low tomorrow, right? So you're not buying right into that high. Again, get to it early here tomorrow on crude. We definitely know, again, right, it's always early in, early out on Wednesday mornings on crude oil. And don't forget the inventory levels are posted below the video tonight, so you have them ready for tomorrow. How about some S&P? The S&P is bullish and trading inside a range as it tries to retest that 2,400 round number and possibly that prior week high later on this week. The bulls ended the session unable to retest the highs, which developed into this trading range, which tells us to avoid buying the high and focus on buying the low of the range near that battle zone using failure setups tomorrow. The most important clue on this chart right now is this trading range right here. There's no doubt about who has control right now, right? The bulls definitely have control. There's no way, right, to call this a bear market right now. So whenever we see a trading range like this, the bulls, right, have the bias. Whenever we have a trading range, we're always thinking, let's buy below the low of that range, right? Let's get it down into that battle zone. Let's see seller failures. Let's see traps, right? Let's find buying opportunities down below the low of that range. Really, the only other scenario here would be, right, to look for buying opportunities up above the range. And the hard part about being a buyer up above the range tomorrow is you can see here that triangle or that wedge, right? A triangle is flat, a triangle is sideways, a wedge has a directional bias to it. That wedge going higher, got to be careful. I don't want to be buying into the top of that wedge, right? And again, we have that big round number at 2,400, right? So got to be careful being a buyer up around those highs. What you'd really want to see for tomorrow is see a real strong move up. Show me some proof that these buyers are hunting for the measured move and the prior week high. Show me a strong move up, and then look for what I call a fake out breakout pullback. Coming out of a trading range, really what it is get that moving average up, and then two-legged pullback. It's a trap low below the moving average, and that will allow you to buy without buying high. Basically, anytime the market tries to break out of a trading range, you have to expect that breakout to fail. Most breakouts fail. That's why breakout strategies, right, have become unsuccessful the past few years, is the markets are far too efficient, right? Buyers and sellers know better than to trade breakouts. So avoid trading breakouts, but if we do get a successful breakout, again, you don't really know if a successful breakout will be successful until after the fact, right? So you got to wait for it, unfortunately, wait for it to break out. Don't try to take that first pullback. That first pullback is usually a head fake, right? It's that second pullback that is always going to be the most reliable way to do it, right? Looking for reliability, right? Our job as traders is to do as much as we can to produce reliability, remove risk, and increase, right, the dependability of all of our setups. So look for that two-legged pullback as it breaks to the high. And again, you get a measured move for the target, right? That measured move for a target up there at 2403, and of course the prior week high. You know, we don't really worry too much about the prior week levels until we get closer to the end of the week, right? So as we get closer to that week, obviously, right, keep an eye on that 04 half. The measured move will be the objective here, right, until we get later on this week. So down, seller failure, and back up. Look to be a buyer inside of the battle zone. Again, if we go up, two-legged pullback, right, to avoid buying high. Make sure you buy low here tomorrow. How does this market turn bearish? On strength. Strong move down, right? Strong move down. Moving average comes over. Again, I have no problem being a seller right now. I'm not married to this direction. I could care less which market I trade, what direction I trade, or what price I'm in at. As a day trader, price, market, and direction are pretty much irrelevant. All I want is volatility and market personality. If it does go bearish, I'll gladly take sells. I just need to see some proof to confirm we're bearish first. Lower low in price, show me some strength, hold that pullback, and if we can get that pullback held, we know their objective is to retest that low at 86 3/4, and we'll look for a new channel, we'll look for a new set of measured moves, right, and we'll look to sell high once it turns bearish tomorrow. So keep your eyes open on that. And don't forget, S&P will wiggle around a little bit tomorrow morning as of 10:30 when the inventory number comes out for crude oil. Let's keep going here. How about some gold tonight? Gold is bearish and trading at the low of a steep, narrow channel after the seller has got a perfect opportunity to sell high to finish today's session. The two big clues on this chart are the slope of the channel and the recent break above the channel and a retest of that low. The slope of this channel tells us the trend is very strong, so we don't need to wait for much retracement off these lows to find reliable selling opportunities. The big clue, however, is that most recent break and retest of that channel. Notice when price went above the moving average earlier today, right here. Right? Notice here where price went above the moving average, it broke above the high of that channel and then came slamming down, right? When price went above that moving average, that gave the sellers an easy opportunity to sell high. And now that price collapsed back down again, we assume those sellers will need to see another high price before they get tempted to sell more tomorrow. Remember, it's all about sellers want to sell high in a bear market, and they just got a great opportunity shortly before the closing bell. At this point now, those rights, you guys can buy those dips. Don't forget, if you want to learn more about our trading strategy here at School of Trade, I would highly encourage you to join our free trial. You get an invite for that free pass in the afternoon as well, and you can learn all about the who, what, where, when, and why we're known as being the industry leader in trading education and professional trading strategies. While you're here, don't forget, I'm always here to answer all your questions. Hit me up on live support. I got a great frequently asked questions page, right, among many other great resources on the home page of the website. Don't forget, if you're logging on right now from YouTube, it's only a short snippet on the YouTube channel. Not to worry. There's a link in the description of the YouTube video. Follow that link. Join me on the blog at Sideways Markets for the full-length version Monday through Thursday, right? Or follow the link and come here to the website at School of Trade and join the free trial or get started as a beginner, intermediate, or advanced member. Guys and gals, great job today. A very, very good month of May we've had so far. Another big day of learning and earning opportunities coming tomorrow. Don't forget, trade your plan tomorrow, right? Plan your trades and trade your plan. I look forward to seeing you all tomorrow at 8 o'clock Eastern time in our trade room. If not, we'll do it the same time, same place tomorrow night on our nightly newsletter. I'm out of here, guys. Adios, amigos. Bye-bye.